On Friday, we saw gold making new all-time highs while the fear and greed index was moving into greedier territory. So what's going on with this September stat? We're supposed to have a bearish September. Is that null and void? And are we about to experience something that hasn't happened in the last 5 years? Now, last week, we saw more cracks out here in the stock market. For instance, we come over and look at FedEx. FedEx gapping down. FedEx on Friday was down 15.23%. And now it's been able to come all the way back down here, filling the gap. And we got to wonder, is FedEx warning us about a potential slowdown in the very near future? If we look at what Goldman Trader says, essentially the front end USD rates signal 100% probability of recession, but risk assets are calm. This is a structural market dislocation, but few have a framework to answer which one is wrong. Now, we come over here and we look at this chart real quick, and this goes back to the article real quick that I shared with you guys about Goldman Sachs. And I want you guys to pay attention to this line right here. This is basically signaling there's a 100% chance of a recession within the next 12 months. You can see back here in 0809, we're at the 100% level, and we all know how that ended up. Very, very bad. And the stock market has really been elevated on all this AI hype. And the question is the bubble now starting to burst? Now we come over and look at the yield curve, right? We've been watching the 2 versus 10-year yield for quite some time. We've been waiting for the yield curve to uninvert. Now we are above the magical red line, which is a point in which the yield curve is no longer inverted. But I want you guys to pay attention to it. It's the steepening of the yield curve, which could pose a problem in the very near future. Now, when we come over and look at Dow Jones Industrial Average versus the Transportation Index, notice the Dow Jones making new all-time highs, but we look at the transportation index is having to scratch our head saying, you know what? Something just ain't right. Why do we see transports struggling so much at a time when the Dow Jones is essentially making new all-time highs? Then we look at the fear and greed index, and it looks like there's nothing to worry about. Come on in, the water is warm. And the question is, will we hit extreme greed before moving back into neutral territory? It seems like over the past couple of months, every time we get into greedy territory, the bears come back in, boom, they smack it back down into fear territory. Then when we look at the most recent investor sentiment survey that just came in this week, the bulls are now 50.8% on the bull side of the market. Very little in terms of indecision. We look at the historical average, it's 37.5. So are the bulls a little bit too confident at a period of time where we normally see a lot of weakness in this market? Now, another asset that's showing a lot of bullishness out there is when we look at the SPY, or the S&P 500 versus HYG, high yield bonds. And notice high yield bonds screaming to the upside. However, the S&P 500 is not all the way up there. And if we compare, S&P versus HYG, and then we look at the Dow versus the Transportation Index, you guys can kind of see the picture that I'm trying to paint, where we see the transports actually lagging, but the high yield bonds are rocketing up. This could be a sign there could be more upside pressure to come. And we come over and look at this article right here. Stocks poised for first September gain in 5 years. Why more good times could lie right ahead. Now, speaking of good times lying up ahead, we can see right here on Thursday, September 19th, the S&P 500 closed at a new 12-month high, as well as an all-time high. Now, if you go back to 1950, there's been 29 years in which the 12-month high was set in September. In those 29 prior cases, that we can see that actually in October, we have been up 25 of those times and only down 4 times. So are we going to buck the seasonality trend this time going into October? And also notice anytime we've had a 3% more or move in October, notice every single time it has been to the bullish side. Now, I also want to remind you guys of this stat right here. And this is showing basically the last 2 weeks of September in terms of trading times, going all the way back to 1974. Now, last week, we projected that we would have a down week in the market by looking at this stat. However, that wasn't the case. Now, if we look at the week past OPEX, aka quad witching, notice we have that same stat in terms of up versus down. We have been up 16 times, down 34 times. And if we look at the 3% moves, one of them has been to the upside. 7 of those occurrences have been to the downside. Now we got to think about, did the Fed make a big mistake? Fed recalibration is a sign of confidence, not panic. And the reason why there could be a chance of panic is this fact right here. The market knows that every time the Fed has went on an aggressive rate cutting campaign, the stock market has always had devastating pullbacks. 36%, 48%, 27, 51, 58, and 35% pullbacks. The question is, how deep is the pullback going to be this time around? You guys let me know in the comment section down below. Now, you might even say, Mike, one rate cut of 50 basis points doesn't necessarily mean it's aggressive. Well, let's look at what the market's pricing in for the next Fed meeting as well. The next Fed meeting, the market is pricing in 51% chance we get another 50 basis point cut. And I got to tell you guys, the Fed is not doing that out of the goodness of their heart. They're doing it because they know something is already broken and they're trying to head it off before it gets even worse. Now, I want to make everybody aware, Apex 7A massive 80% sale off all their evaluation accounts, passing as little as 1 day. And something else that is very special about this sale, $85 activation fee across all account sizes. If you want to take advantage of this offer, use the link in the description box down below and use promo code Mike at checkout. Now, we look at some of Friday's price action out there. We look at the SOX index real quick. Notice we do have a bullish cross of the MACD indicator. However, intraday we sold off. We were able to come back down into that gap candle. We did not completely fill the gap. And then they were able to buy it back up towards the end of the day. We take a look at NVIDIA closing near the lows of the session, down 1.59%. We take a look at Microsoft was also down 0.78%. Then we come over and look at AMD. AMD actually having a hammer-ish looking candle, kind of more of a doji, long-legged doji or something like that. We did not come down and fill the gap. Then we come over and take a look at Intel. Intel had a nice little bullish run up 70 cents on the session. But if we look left, we know Intel has that huge gaping gap to the downside. Then we look right here, how Intel fell from global chip champion to take over target. And what that article basically goes on to say is Qualcomm could be chomping at the bit to essentially take over Intel. And the question is, what price is Qualcomm willing to pay? That could be what actually sends Intel back up, potentially filling the gap all the way over here. Now, we come over and look at the volatility index. We've seen the volatility index has been on the decline. And we zoom this out, we're really not that far away from 52-week lows. 52-week lows come in about $10.70. But we have a lot of price action this year where we've been trading around $12.45. Now, if the VIX gets back down there, is that going to be another jump off point, aka another volatility spike about to occur? And if that's going to be the case, could it be the unrest over in the Middle East where we see that Israel went on the offensive against Hezbollah, basically taking out some of their leaders? Then we see Hezbollah also firing back into Israel. Now, if that escalation rears up, maybe that'll cause a little bit of uncertainty out there in the market. Hopefully it does not spill over into the stock market. We come over and we look at the dollar index. What do we see? Dollar index basically consolidating right down here. We've had this previous low and we keep going below it. Boom, we get right back above it. Now the dollar, once it starts to lift from this area, if indeed it does, watch the dollar to come up towards about 102.14, then up towards 102.53. Now, if the dollar is going to go up, that means gold is likely going to come back down unless people are trying to flee into a safe haven where they think inflation's going to be on the rise once again, or just overall a weaker economy. And what do we see? We have this ABC completion up here, about 2,670 out here on gold. Now, if the dollar is going to start to go up, I would prefer to see gold go ahead, take out the ABC pattern, then we can start to see a pullback in gold. Now, one of the areas we mapped out for gold to try to play this ABC pattern on the way up was this little prior resistance level right here. We just failed missing it by a few ticks or so before gold started to run to the upside. Then we come over and take a look at crude oil. Crude oil is still being able to hold above the prior swing point right over here. And where is crude oil likely going to go? Right back over here towards this high volume area, anywhere from about 74.87 to about 73.63. That's where I would like to see crude oil go to. Now, we do want to be mindful though. This has been a little bit of a decent leg up. It would make sense to get some type of pullback, maybe come back, retest this swing point right over here, and then set up some type of ABC pattern that could actually take us up towards that price point. Now, if we come over and look at sectors performance on Friday, look at utilities, by far outpacing everything else. Now, normally in a healthy economy, we're not seeing utilities leading the way. And then we look at the 1 week performance real quick. Notice communication services followed by energy. Now, the reason why I'm bringing up energy is energy has been one of the contributing factors of a better CPI reading. Now that we have the Fed cutting rates and energy prices on the rise, is that a recipe to see the CPI data start to rise once again? Now, as we come over and look at the XLF, is this going to be a double top, or are we setting up a larger ABC pattern to the upside? The MACD indicator, as we're coming back up, retesting this prior swing point over here, has a lower high at this moment, which indicates divergence, a lack of momentum. Then we basically have an inverted hammer right here, followed by 2 hanging man candles. Now, a hanging man candle is the weakest of all reversal patterns. When we go ahead and we combine this all together, maybe we see a little bit of weakness in the short term, come back down, maybe try to fill the gaps, and then later on try to rally back up. Keep in mind, every day that goes by, we're getting closer and closer to the presidential elections. We come over and look at the Dow Jones. Dow Jones having this large gap out here from last week, which needs to come all the way down here to about 414.85. MACD indicator is about near the equal high over here, but prices are substantially higher. So I would still classify this as a little bit of MACD divergence. Out here on the 1 hour chart, we do have a bearish cross of the MACD lines. However, it's not really making a beeline towards the 0 line yet. We can see that large gaping gap. Now, when we look at the 30-minute profiles real quick, notice we had that large gap, and now we have 2 days where we're basically stuck up here at this upper level. And I always caution traders on this. If we're at elevated levels to the upside or down by the bottom and basically consolidating, and in this case, MACD indicator was well above the 0 line. If it starts to work its way down towards the 0 line and we're still elevated up here near these levels, watch out, we could get ready for another leg higher in this market. However, if we do start to go down, one of the key areas I want to watch on the Dow would be down here at gap support at 418.14, and then all the way down here for the gap being filled at about 415.01. Now, if you think about that, coming down and filling the gap would really do nothing in terms of compromising the trend that is currently intact. Now, when we come over and look at the Russell 2000, it gets even more interesting. We look left, well, we have structure, basically candle bodies up here to the candle wick. We basically wicked up into that area with a nasty shooting star type of candle. We actually had 2 of them back to back. This one had quite the long wick. Then on Thursday, we had the hanging man candle. Then on Friday, we basically broke the low, but we were unable to close below the low of that candle. If we did, it was very, very marginal. Now, the question is, as we look at the Russell 2000, we have a gap right here that hasn't been filled. We have another gap that hasn't been filled, and we have another gap. So we have 3 gaps that still need to come back and get filled. Then as we dive down to the 1 hour chart, we can kind of see the Russell 2000 kind of creeping a little bit lower. MACD indicator does have a bearish cross, trying to make its way down towards the 0 line. Then out here on the 30-minute chart, look at the MACD indicator. If we stay up here at these elevated levels, watch out, we are likely going to take another leg up. If the MACD indicator gets towards the 0 line and starts basing out, watch out. Now, if we look at the profile shape, we had a D as in dog shape profile. That's something we talked about in Thursday night's analysis and part of the live stream on Friday. We anticipated the day to form a D as in dog shape profile. Now, if you notice, the Russell 2000 was able to take out the low from the prior day, so it's not going to be an inside day, but we still have this area that we've had mapped out. I think we mapped this out in the pre-market. This is an area I still think comes back and get tested. Now, the first time we come to the zone, expect the market to probably get a reaction out or consolidate at that area. Now, that zone is going to be anywhere from 220.80 down here to about 219.97. Now, we look at the economic calendar out here for next week. What do we have in store? Well, Sunday night, the BOJ has a bank holiday, so Asia could be a little bit slow come Sunday night. Then on Monday, we look at Monday, what do we see? Well, we have flash manufacturing PMI coming in at 945. We have a couple FOMC members speaking on Tuesday. We have CB consumer confidence coming out at 10 a.m. I really hate news that comes out after the market's open. 9 a.m. we have the S&P CS composite 20 HPI. Then on Wednesday, we have new home sales, crude oil inventory numbers coming out, more FOMC members speaking. On Thursday, we have final GDP quarter over quarter. We have weekly unemployment claims. We have core durable good orders, final GDP price index quarter over quarter. Then let's not forget, we have FOMC members speaking before the bell. And more importantly, Jay Powell is going to take the podium 10 minutes before the market opens. So we'll see what kind of fireworks that could bring. 10 a.m. we have pending home sales. 11:15. Yellen is going to be yelling. So we're going to have to pay attention to what she's saying. And again, more FOMC members speaking later throughout the day. Then on Friday, we have the Fed's preferred measure of inflation. We get the core PCE price index. Is it going to show that inflation is indeed trending lower? And at 10 a.m., we have revised consumer sentiment and revised inflation expectations and another FOMC member speaking. So we do have quite a busy week out there when we look at economic news. Now, as we come over and look at the SPY real quick, you can see the MACD indicator is trying to firm up here just a bit, and this pattern becomes a little bit more evident. When we close out the week last week, we closed in the upper third of the range. We do have a small wick on the top, a small wick on the bottom, but let's talk about the pattern real quick. And that's going to be grab our Fibonacci extension tool, measure A to B, B to C, and we project up here for D. That gives us a price completion at about 510.16. Then as we dive down to the daily chart, notice we do have this gap. So we're going to see if we see weakness in the market this week, will we come down and potentially fill that gap? We have a little bit of high volume within this area as well. Now, if we can push this minus development area before we get up towards that ABC completion, we do have a high volume area that can act as a magnet at about 496.18. On the hourly chart, the MACD indicator is crossed to the downside. We did have a little bit of MACD divergence as we price made a new high. The MACD indicator failed to make a new high. We still have the gap that most likely will come back and get filled in the near future. Now, we can also make the case that maybe, just maybe, this is going to set some type of ABC pattern to come down here, fill in the gap. Now, when we look at the volume profile, I'm going to classify this more as a D as in dog shape profile, which is kind of what we were expecting. Now, I did expect this to probe a little bit higher, not really so low, not really as low as we did out here. Now, as you look at this, we basically come into roughly the middle of the gap, maybe not quite to the middle, but somewhere in that ballpark. Now, if we start getting back above value area high at 482.98, then we turn and start coming back down. I want to target the point of control, value area low, the lows from Friday. And then I want to see, can we go ahead and come all the way down here, potentially fill in the gap? Now, if we never break value area high and we just simply break value area low, then I still want to focus on the swing low from Friday, maybe front run that a little bit, then look down here for the gap to be filled. Now, additional target we could use to the downside would be this candle body at about 475.25. If we break value area high and we stay above it, let's see if we can retest this point of control at about 484.61. Now, when we come over and look at the futures markets real quick, we can see the Nasdaq was able last week to take out that point of control at 20,117. Now, when we look at the volume profile levels, we have value area high, 20,009.75. Point of control is down here at 19,664.75. And value area low is going to be at 19,549.25. Now, if you notice, if we're going to come back down to the downside, I want you guys to focus on this area right here. Now, if you want to be a buyer in the market, this is where a buying opportunity may present itself. So if we come down to the zone, I want to see, do we essentially consolidate there or start to bounce out of that area? If we do, I then want to target value area high, retarget the highs from last week, and then see if we can continue to go higher. If we slice through this minus development area, then I want to target this high volume area on the profile at about 19,783. Then the point of control value area low. And let's not forget, we have that untested value area high from the prior week at 19,410.25, along with the untested point of control at 18,928. As we come over and look at the daily profiles, now this doesn't look as much as a D-shaped profile. I would have liked to see the profile extended a little bit more to the upside, but for all intents and purposes, we did have a basically consolidation. We spiked down a little bit, we came back up, and we're basically stuck in that range. Now, I really thought that we had a good shot of maybe taking out that point of control at 20,133.25, but you know what? There's always next week, or should I say this week coming up. We look at the volume profile levels. We have value area high at about 20,057.75 with the point of control down here at 20,035.75 and value area low at 19,976.25. We simply flush below value area low. Then I am going to want to turn my attention down here towards these candle bodies, somewhere in the ballpark of about 19,906. Anything below that, I want to see, can we make a run all the way down here towards about 19,824? Then I want to pay attention to the weekly profiles we talked about earlier. If we break value area high and we can hold above it, then my attention is going to turn towards 20,133.25. Then above that, I'm really looking for a retest of the highs from last week. Now, as we come over and look at the SPY real quick, we see on the weekly chart, we are able to make a new all-time high this past week. We close roughly right around the upper third of the range. We do have a wick on the top of that candle, a little bit of weakness coming out there. MACD indicator is elevated, trying to get another bullish cross. Now, if we actually go ahead and map out a potential A to B equals C to D pattern, we can see that will actually complete up here about 592.09. Then when we dive down, look at the daily chart, we had this gaping gap out here from Thursday. We had a doji candle. Then on Friday, kind of a hangman candle. The bears tried to push it down. They brought it back up. I still think this gap is going to get filled at some point in the near future. We'll see if it's one of the news releases we have this week, or maybe even Powell when he takes the podium. Now, also, if we look right over here at the composite profile, we have a little bit of volume right near that gap being filled. However, if things get uglier, watch for the gap all the way down here at about 542.93. Then as we dive down, look at the 1 hour chart, you can see we're just basically stuck within this consolidation area. MACD indicator is trying to work its way back down towards the zero line. On the 30-minute chart, this is a little bit more evident. I'm still going to classify Friday's volume profile as a D as in dog shape profile. And if we can get above value area high, then I'm looking for the market to basically retest the highs from Thursday. However, if we start breaking below value area low, look for the lows to come back and get tested on Friday. Then maybe this candle body at about 563.24, and then all the way down here, potentially fill in the gap. Now, we could also make the case that we're trying to set up an ABC pattern to the downside. If we take out the high from Friday's afternoon, that would have to make me recalibrate where that completion would be. And keep in mind, the pattern would not be validated unless we break below 565.14. If we stay above it, then we do not have an ABC pattern on the way down. Now, when we come over and look at the futures markets, notice we're closing right near value area high, which is going to come in at a price point of about 5760.25. The point of control is going to be down here about 5697.75, with value area low being down here at 5675.75. Now, if you're looking to be a buyer in this market, I'm going to map out an area for you guys, this little minus development area within the profile. That's going to be anywhere from about 57.40 down here to about 57.36. Now, if we come down there, I want to look for evidence that we're either starting to consolidate or we're starting to get a rejection from that point. If we do, then we could target that value area high. Then we can retarget the candle body highs out here from last week at about 57.93. If we flush below this minus development area, then I actually want to target this distribution node on the profile at about 57.20. Then look for the point of control value area low. Then let's not forget, we still have this untested value area high from the prior week at 5591.75 and an untested point of control at 55.38. Now, when we look at the daily profiles, I want you guys to pay attention. We had this zone marked off on Friday morning's live stream before the market ever made it down there. What do? We wicked it. Boom, we bounced right out of that area. I'm still going to classify Friday's shape as a D as in dog shape profile. And I'm going to go ahead and remove all the drawing objects from this chart. We can see that we have value area high coming in at 5767.75. We have the point of control at 5763.25, with value area low coming in at 5751.25. Now, we're right kind of in the minus development area. If we break value area low, I'll look down here for these candle bodies at 5741 to come back and get tested. If we break value area high, I'm going to look for a retest of the highs from Friday, then look and see, can we push back up towards the highs from Thursday, and then potentially go ahead and run and make a new all-time high. Now, if you guys want to see the pros and cons of fast track trading, make sure to watch this video right here.